Okay, welcome to a capital hungry breakdown of GBPJPY. So, as we are coming towards or in a new quarter, a new monthly candle as well, we just want to do some more macro analysis from the higher time frames down to the intraday time frames to see what potential trade ideas we can find as per any swing potentials, intraday potentials, and of course, during the market update webinars later in the week I'll also share any potential scalp ideas through sessions as well. But it's been a minute since we have done some macro analysis, and it's always good to understand what is going on the higher time frames and in the bigger picture, and using that alongside our key levels, market structure, market sentiment, and more to map out trade ideas with probabilities in our favor. Okay, so what we just want to identify first here on GBPJPY is that from a macro perspective, we are very bearish. You can see that we've had impulsive sells to create historical low points with only 50% corrections and lower highs being formed. And then you can see another set of impulsive sells as well. When we're looking at some possible historical repetition, you can see from the after the 2008 or pretty much during the 2008 financial collapse, we entered a bit of this descending bearish channel of market structure on the quarterly and monthly period. From a historical standpoint, it looks like we are in that same type of phase now where we can take advantage of a potential retest of these higher time frame lows around the 119 handle, depending on the fundamentals behind GBP. Of course, the focus is now on COVID-19 and the potential for round two of lockdowns, where if you were following the trade room or the newsroom, you would understand that the UK does have potential to go into a tier 3 lockdown again. Still no details of how long or if it's actually going to happen or when it's going to happen. So we just have to keep that in mind because that will impact the Bank of England's approach on how much stimulus they will put into the GBP, specifically, the UK economy. So we just want to keep those factors in mind. But we are noticing more Brexit negativity picking up. We are noticing COVID fears picking up, and we do have that potential for some one-sided volatility if we have those round two of lockdowns in the UK, if we have continued signs of a no-deal Brexit, and if we have that market fear pickup, that one-sided volatility of sellers' pressure on the sterling and JPY, of course, the Japanese yen as a currency safe haven, increasing in strength and gaining value so we could take advantage of GBP JPY sells. All right. Now, of course, what I'm looking for is a potential repeat of history and price coming to revisit these lows at around 120, 119 area. You can see we are still in this bearish market structure and have failed to break that. So for long-term buys, we would need a break out of that structure after failing to break these lows, where we are starting to create a bit of a flat candle body support on the monthly and 3-month period. We would still need market optimism to weaken the value of the Japanese yen as a safe haven. We would need more optimism and positive signs around Brexit and the UK trade deals globally. For example, as we had that optimistic boost during the US and UK trade talk for the groundworks laid for that. That's just a small example. But we would need more of that global optimism just to weaken the yen, as I just said, and COVID to fade from the markets. Then if we go into an economic recovery stage, similar to after the post 2008 crash, we will get a correction or a deeper correction of this downside move as we break out of bear structure and buyers take over, and we can start playing that upside to the 150s, 160s, 170s. Okay. So for long-term macro buys, at least to correct this previous 3 month very bearish drop and go up like 1900 pips, we would need buyers from a technical perspective alongside that positivity of GBP fundamental support and a price above 145 region around here. Once we have a clean break of 145, and we have global economies going into a recovery stage, coronavirus fading from the markets, then it makes more potential, then it makes more sense that we can start playing those intraday buys up these higher time frame ranges where we would just be looking for pullbacks, buys, pullback buys, pullback buys, pullback buys, as long as the market fundamentals continue to support that optimism, GBP support, and Japanese yen weakness, right? We would just be playing the same bullish trend for an extended period of weeks and months and playing the intraday ranges accordingly with day-to-day market sentiment and just zooming in the time frames looking for those trade ideas. But it's always good to understand the macro picture of what you would need to create that trend to get that price action move accordingly. And then when it does happen, when you have those confirms building up, you already understand the higher time frame bias, the macro fundamental bias, the higher time frame technicals. So on an intraday perspective, or if you're scalping, it's easier for you to play with the trend, to play with smart money fundamentally, to play with what is actively happening in the real world markets. Okay. But with that being said, if we still have that negativity with Brexit, if we have that wave 2 lockdown, if we fail to break above, let's just say 139.5, I am starting to look for sells to retest these historical low points or fill this wick range at least to 125 and plan, and especially safer sells below 133 flat. Okay. So looking for signs of historical repetition. Right now, the market is in more fear mode, and we do not have any signs of breaking that bearish structure or breaking above this candle price sensitivity area. Like we don't have this repeat here yet. So we don't have any validation for real long-term buys. Can we play the buys potentially for this wick fill, potentially up to like 139 region, 140 region? Yeah, depending on the intraday structure and the fundamentals going on. But looking at the higher time frames, and especially when we zoom in now on the monthly as well, this was just looking at the quarterly period. It's better refined. We can see what we would need. This was the low and base created. This is a potential low and base that's being respected here. But even if we come to revisit these lows, it's over like 800 pips that we can very much take advantage of. Sorry, that tripped me out there. I don't know what that was. And looking at the price action, a very strong rejection at that bearish market structure at this strong price sensitivity area. And that bearish candle did engulf the previous bullish candle as well, showing us more sellers pressure. Safer sells on an intraday on a long higher time frame perspective would be below 133 flat. But I am looking for potential pullbacks on this new monthly candle to around 138.5 potentially. So overall on GJ, with the current structure on the 3 month and 1 month and current fundamentals at play and market sentiment and the negativity around UK potential lockdown round 2 and Brexit, I am in a higher time frame sell bias. So on the intraday, we might play some intraday buys depending on the structure and day-to-day volatility, but I am looking for those buys just to set up higher time frame sells unless we break above 145 and have this repeat, which we do not have the fundamental validation for that just yet. We do have higher probability of sellers entering the market when this monthly candle creates a more significant top wick and then riding the sell waves down. So now we just want to zoom in on the intraday charts to see what potential ranges we can play with, understanding that the macro fundamentals and macro bias right now is showing us sellers in control and that potential for history to repeat and come revisit these lows at least, especially with recent negative headlines, Trump getting COVID, other politicians around the world getting COVID. Global data has starting to decline again, potential for a tier 3 lockdown in the UK, all this Brexit negativity. So we just want to keep all that in mind. So now, something else I wanted to identify on GJ is even on an intraday perspective, from the peak sell point of around 142, this upside move has still only been about a 50% correction. Even if we peak a bit higher to 137.2 or that 138.5 key level, if we go from peak to peak, with this whole region here would still be about a 50% correction of that higher time frame sell-off from all that Brexit negativity that entered the market. But when we are looking at current price action and market structure, we are still showing some higher potential for bulls up to that 138, 137.2 and 138.5 point if we remain above 136.5. But that would have to come with a pullback first and above these intraday highs at 136.8. So let's just start to zoom in here. So if we have a pullback, an intraday candle close above 136.8 psychological price level, then I could see those buys up to 137.2 where we'd have to watch the reaction, and 138.5. At these price points, though, I would start to look for potential sells when we are looking at the monthly chart. Like when we're looking at the quarterly, when we're looking at the monthly, and of course, safer sells to new lows and at least previous intraday lows would be below 130, 135.5. Okay. So I'm just going to quickly label this chart and then describe it with what I was talking about on the higher time frames and what we have going on this week as well. Okay, so you guys can see the chart now, of course. So, of course, watch this full breakdown. Don't just look at the chart I send so you can understand my viewpoint and how I got to this viewpoint. Look from the higher time frames to the intraday time frames. The higher time frame is still in that bearish structure on the 3-month and 1-month, with the potential for that historical repetition if we do not have that market optimism or break above the 140s levels. Okay, we have that Brexit tug of war and uncertainty causing a lot of fundamental indecision and mess, as we have been in this 100 pip range between around 135.5 and 136.5, as well as potential for a tier 3 lockdown for the UK, which would leave the UK economy stagnant again, lead to more jobs lost, and a lot more uncertainty and potential downside for the British pound accordingly. We also have Trump catching COVID, overall market fear increasing, which from an intraday perspective is increasing investor inflow into the Japanese yen. And we have the Japanese yen technically still respecting bullish structure, potentially going back to intraday highs. So we'll continue to play the key levels, psychological price levels and ranges, use the lower time frame price action concepts at the key levels and psychological price levels as taught in the webinar educational webinars. And of course, keep an eye out as we do have UK PMI figures, construction and composite PMI, and GDP figures this week. Sorry, I was just looking at some COVID headlines coming up that you guys will see in the newsroom. Just there's so many COVID headlines specifically for the UK recently. Oh, it's just around the technical issue that happened with the spread reporting with the cases, but there was a big case spike as well, which that just reminded me of, as they had 20,000 cases in one day. So that was a big case spike as well. But yeah, safer sells would of course be breaking below key level, higher time frame key level 135.5, coming below this order block and price sensitivity area, as well as where sellers have failed to break on the intraday multiple times now, getting some key intraday candle closures below there and running the sells down, a 4 hour candle close below there. Otherwise, if we continue to consolidate in this area, then break above 136.8 psychological price level above previous intraday highs, we can take some deeper corrective buys up to those better potential sell points and watch the psychological price levels accordingly. Then I am more in a higher time frame sell bias, of course, to these intraday low targets, where we would have to watch reaction if price does come down to previous intraday lows, of course. So let's just see how this week goes and how price action is developing. I will send market update webinars accordingly. And these are the potential trade ideas I see so far, with all the reasoning stated as well.